Ladies and gentlemen, good day and welcome to Agarwal Industries Corporation Limited H1 FY23 earnings conference call hosted by HIM Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadeen Rane from HIM Securities Limited. Thank you, and over to you, Mr. Rane.
Thank you, Neerav. A very good morning, ladies and gentlemen. Thank you for joining the Agarwal Industrial Corporation Limited FY23 earnings call. Joining us on the call today are the senior members of the management team, Mr. Vipin Agarwal, Chief Financial Officer. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature, and the actual results may vary from these forward-looking statements. I would now like to hand over the call to Mr. Vipin Agarwal to commence by sharing his thoughts on the performance strategic progress made by the company. Thank you, and over to you, sir.
Thank you very much, Ramdeen. Good morning all, and a very welcome to everyone who has joined us today. I take the pleasure of welcoming you all to the first half of FY23 earnings conference call of Agarwal Industrial Corporation Limited. Let me start by giving you a brief overview of the company's business and will then take you through the financials. We'll then be happy to take questions if you have any. Agarwal Industrial Corporation is an integrated infra-ancillary company focused on a wide range of innovative bitumen products backed by our world-class logistics infrastructure, which comprises of 6 large marine vessels having a total capacity of 38,000 metric tons, which are used in importing raw materials from oil-producing countries. Company is having a fleet size of 650 LPG and bitumen tankers and 7 storage terminals for importing bitumen, totaling to a capacity of 30,000 metric tons, having direct access to the shipping network located at Azira Port, Mumbai Port, Dighi Port, Karwar Port, Mangalore Port, and Haldia Port. And Vadodara is in our inland location where the imported product is being stored. We, along with our subsidiaries, have 6 manufacturing plants located at Taloja, Vadodara, Belgaum, Hyderabad, Kochi, Guwahati. Moving to the financial results reported, starting with the consolidated quarter highlights of H1 FY23, the company's revenue has seen a growth of 42.56% in H1 FY23 at rupees 809.99 crores compared to rupees 568.18 crores in H1 FY22. Company reported EBITDA of 61.57 crores in H1 FY23 versus 38.52 crores in H1 FY22, a growth of 59.83%. Company's PAT has surged by 100.24% from 19.35 crores in H1 FY22 to 38.75 crores in H1 FY23. Further, I would like to add that the demand trend continues to be in the favorable across the infrastructure industry, which is quite exciting for us. Our customer understands and appreciates the company's execution abilities, which constantly result in the financial growth of the company's market share. We continue to demonstrate profitable performance in long term through the relentless focus on leveraging our 2 decades of experience in bitumen and logistics. With this, I would like to conclude my opening remarks, and I would now request the moderator to open the forum for questions from the participants. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, good morning, sir. Sir, the kind of cyclicality we see in container rates in general, does it equally apply to specialized vessels such as ours or bitumen, or is the market reasonably stable?
No, it's different for container and the marine vessels. Container rates have increased as per the demand and in unavailability of the containers. And though we are not dealing with the containers as much, our main focus, our main import logistics is marine vessels. So container usually does not play any part in our business as such.
Okay, sure, sir. So, sir, just a follow-up to that is that we started the chartering business in 2020.
2019.
So since then, 2019, yes. And since then, we see the charter rates in general stay very buoyant. They reached to sky-high levels. So when we are forecasting a growth of 20% plus, is that valid for our overall business? And do we expect to maintain 20% plus ROCs on the overall level going forward?
Yeah, in absolute percentage, if you say, it will always vary 1%, 2% here and there. But yes, if you see the past and coming to the demand that we have in the future in the same line, I think there is no worry in terms of return of ROI, because there is good demand and we are adding fleets, vessels now, then and now. So if we are increasing the fleet, that too adds to the bottom line. So percentage-wise, I think to name a particular percentage, it's not be fair. But yes, 1 or 2% plus minus will always be there, but it will remain in this range.
Okay, sure, sir. And so secondly, last year the PSUs have announced that by 2025 they'll be increasing the refining capacities by 20%. So do we see some impact in the downstream bitumen production and a potential revision to the growth we are projecting? Or
no, absolutely not, because whatever PSUs are predicting, it is only for the refining business of the other oil products. For bitumen, I think in fact they will be cutting down the production. So the demand of bitumen will definitely come from imports only. There will be no additional capacity from any of the PSUs. In fact, it will go down.
Sure, sir. And we don't see a negative from government's plan to have storage farms for bitumen and other.
Because even if the government is not focusing on any new projects, if we have to think hypothetically, the existing roads will require repairing. So even if they are not focusing on new projects, the existing road network that we have, it will require repairing, which will result in demand of bitumen itself.
Sure, sir. Thank you.
Thank you so much.
Thank you.
Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Abhishek Sharda, individual investor. Please go ahead.
Yeah, thank you, sir, for the opportunity, and congratulations for a good set of numbers.
Thank you so much.
Sir, just wanted to inquire about this quarter volumes and H1 volumes.
This quarter volumes have remained steady as per in line with last year, because the monsoons were pretty very serious this time, and we have closed at the same level that we closed last year. In the second quarter, about 42,000 tons. But first half, we have done about 5% growth from 150,000 tons to about 162,000-64,000 tons.
Oh, like in H1, we have done 160K, right?
164K to be precise.
Around 165K in H1. And
yeah.
Sir, in the last phone call, you mentioned the guidance for FY23. It is around 20% above 380. It's
yeah. So that was for the entire year.
Yeah, that for the entire year. So
we will
in this guidance or same?
We will try to maintain that percentage that we have forecasted. 1 or 2% is always up and down, but yes,
yeah, sure.
Because of the very monsoons even continuing till now in some parts of India, the demand is not come as it should come.
Fine. Thank you, sir. Sir, one more thing I want to ask about the market share. Like in the last quarter, it was around 25%. So is there any,
No, I think market share is remaining at the same level. 1 or 2%, as I am always saying, 1 or 2% up and down may be there. But we are trying to we are at 20-25% market share.
Fine. That's good, sir. Sir, can you throw some more light on our shipping business? Like, what is the major, like, because the most of our operating profit comes from this business only. So can you throw some light on
it is coming from this business because it is complementing the Indian operations that we have. Whatever vessels, marine chartering business that we are doing, we are giving it to third parties who is, in fact, supplying to Indian counterparts or to the company in India as well. All this is complementing each other. So without the Indian operation, it is not that we will get the bottom line of only the shipping business.
Yes, sir. So, sir, all the revenues that are coming from the shipping business is from the third parties, right?
Yeah, all from third parties.
Yeah. So, but like as you mentioned that most of our ships are utilized by you only, like third party are very.
Yeah, supplier is looking for a vessels in overseas. In fact, he hires vessels from my Dubai company itself instead of looking into the market.
Okay. And sir, is this business depends on crude oil to some extent?
No. None of the business is depending on crude oil, but yes, very high volatile pricing in crude does impact a little bit, but not a serious threat.
Not to much extent. And sir, since now H1 is past, H2 we will generate most of our volumes in H2 only.
Yeah.
So we can witness improvement in EBITDA margins also with volumes.
If you have, it's already improved. If you have seen year on year or
it has improved.
Quarter in terms of percentage wise also now, I can say this very confidently. Even in terms of percentage, it has improved from last quarter 4.8 to about 7.7 now.
No, sir, I am asking about the ancillary infra margins.
Yeah, I'm talking about the entire ancillary with all the parts of the business is coming into infra ancillary.
Okay. No, so the segment like that you provide ancillary infra, its EBIT margin is around 3.5% EBIT margin, what you given. So I just want to ask, we can witness improvement in this margin with
Yeah, it is already improved. This is what I'm telling you. I am giving you absolute percentage which I have in front of me.
Okay, sir. Okay.
Yeah.
Thank you, sir. Fine. I'll come back in the queue. Okay.
Thank you. Next question is from the line of Vinayak Mohta from Stallion Asset. Please go ahead.
Yeah. Hi. Good morning, sir. Congrats on a great set of numbers. Am I audible?
Yeah. Good morning. Thank you so much. But little slow. Can you be a little louder, please?
Sure. Is this fine now?
Yeah.
Yeah. So, sir, had a few questions to start with, in and around the market size and the market share that you command. So just wanted to understand, you mentioned that you're the largest player in the private sector space. So the 25% market share that you mentioned, is this for the private sector or for the entire market?
For the private sector only, because we cannot compete with the PSUs.
Understood. And what would be the relative share of PSUs as against private sector?
Sorry, can you come back again, please?
In the market, what is the private sector percentage total of the total market size?
See, the total production of PSU is about 5.5 million tons, and the total demand is about 8 million tons. So 2.5 million is private bitumen, imported bitumen, which consists of bulk and packed.
Understood. And what? Okay, understood. And what would be how does the realization growth work in the business? Because last year you mentioned that your volumes were the same, but your revenues has grown by 40%. So is this all led by realization, or there's some other factor also into it?
No, last year volume increased to 20-25%, but the revenue increased by significantly because of the price. It's not that the volume did not grow. Volume grew by 20-25%, but the revenues grew because of the realization of the product, the higher realization of the product because of the increase in the commodity price.
So you see the realization benefit slowing down or normalizing as we move forward?
No, I think it is on the same line as for last year. there is no downfall in the realization of the commodity price.
No, so I mean, if the commodity price normalizes going forward, so your realizations will also have an impact, or this will not fall as much? How will it work going
Because
forward?
volumes will definitely grow. So I will talk about the revenue realization. Realization maybe in absolute terms on a ton wise, but I will talk about total revenues that will definitely increase. If you see the first half of this year, we have already done what we did the entire last year. So 50% is already revenue wise is already covered in the first half of this year.
Understood.
And the third and the fourth quarter is the major contributing revenues over the year.
Yeah.
In that
Understood.
sense, if you go percentage-wise in what revenues we get from each quarter, I think we will easily close above what we closed in FY22.
Understood. And you see decent amount of business flow coming towards you, and you'll be able to maintain the 20-25% growth going forward for the next 3 to 5 years.
Good demand of the product because of the infrastructure development that is going on in India.
And what are the margins that you look to sustain on an EBITDA level going forward over a period of time, average?
So I think we will be maintaining a higher return than what we have declared now, I think.
So you mean higher than the 10% that you've declared as of Q2?
Q2 is not 10%. You are saying it's not 10%. It's 7.73, 7.72%.
Okay, understood. I'll just have the calculation again. And okay, understood. Great. I'll just come back in the queue. Thank you so much.
No worries. Yeah.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Samir Palod from AUM Fund Advisors. Please go ahead.
Yeah, good morning. Can you hear me?
There's a lot of
slight echo from your line. May I request you to speak through the handset?
Yeah, is it better?
Slightly better.
Yeah, hi. Sorry, not had exposure to this company in the past, so some basic questions. In your case, who is the customer? Is it the road contractor who's asking you to import, or is it the PSUs because they can't meet the bitumen requirement, they are asking you to transport the bitumen?
It is both. No one is asking us to import. There is a market demand of a product. So because of the parity available between the import and the production by the PSU, that's the reason why the product is being imported. Though the major customers are the road contractors, and they don't ask us to import, but they have a demand of bitumen, whether they purchase from PSU or from us. So it is all depending upon the relations that we have with the customers, on basis of which the product is being sold. And in fact, we are supplying to PSUs as well. We are supplying to HPCL, we are supplying to BPCL.
So what would be the split? What would be the split in your sales between private sector buyers, contractors, and the PSUs?
I think PSU is hardly, not even 5%.
Okay. And, when I was going through the presentation, it also said that you have your own manufacturing facilities. Basically, I'm guessing these are blending plants where you can customize the bitumen per the requirement. So, how much of your turnover comes from this activity? And, is this a higher margin business for you? Is this the one that is growing even faster than the broader market?
Thank you. Both the markets are growing. In fact, the value-added products, if you consider in the volume in percentage-wise, it will not grow to that higher percentage. But yes, they're between. It is about 30 to 40% of manufacturing product against 60 to 70% of imported product, which is actually a finished product which we are importing. In fact, instead of producing in our factories, we are importing that product so that we save the cost of producing in the factories or the manufacturing plants.
Okay, so is it fair to say that about 30 to 40% of your sales will go through your factory, whereas 60 to 70% would be just the whole logistics chain of imports and then distribution?
Yeah, you can say that.
And margin-wise, how much more margin would you make over let's say, the company average of 7.5%, 8%?
In fact, if you see last year we were at in the first half we were at about 4%, and this year the first half we are at about 5.6%. It's already a jump of about 1.5%. So we will try to maintain or sustain higher returns on as per the percentage that we have got.
No, sorry, my question was not on the overall company margins. I'm saying this, where you're standardizing the products, how much more margin do you make rather than just the import and distribution part of your business?
No, manufacturing, I think it is already at a good level. So I don't see any very spike in that percentage of revenue or margin in that sense.
No, not the future. Currently, how much more margin do you make over there?
We make about 10% in the manufacturing product that we make.
Okay, so 10% over there and maybe 6% in the balance business.
Yeah, so it works out on an average basis only, because absolute terms we are not declaring anywhere manufacturing percentage there separately.
So, and my last question is from a growth perspective, would the thesis be that India will require more and more bitumen, whereas the refineries, even with their expansions, are producing less and less bitumen. So the need for import and hence import warehousing, import terminaling, etc., and distribution will increase disproportionately than just the demand of bitumen.
Yeah. It will definitely grow because of what I just said a few minutes back. The demand is robust, and even if the refineries don't cut down or they sell what they have, the demand will go from 8 million tons to about 10-12 million tons in coming 2-3 years.
Right.
So it has to come, all the demand which will be coming, it has to be fulfilled by only imports, no other mode of getting the product.
And so last question is, sir, how do you define capacity utilization in this business? Now you have 6 vessels, you have a lot of bitumen and LPG tankers, and you have storage facilities. So at optimal utilization, आपका turnover कितना हो सकता है, and then what more capex do you need to, and where you need to put it to keep growing volumes over the next 3, 4, 5 years?
The optimal utilization of tankages is whatever tankages you are having, you should be able to do at least one turnaround. What is the 100% utilization of the tanks? But though we are trying to utilize almost 1.5 times of the storage facilities that we have. So, ideal optimal utilization of tanks would be 1.5 times of the storage facilities that we have. And fleet also the same way. It is, I think we are utilizing 100% of the capacity that we have. And logistics part, it does not come in the same segment of utilization because they are running on a continuous basis.
So, sir, what will be peak turnover with what you have already?
I think there is some disturbance in your voice.
Sir, is it better?
No, it's echoing.
Okay, if you can answer my last question, what will be the peak turnover with current infrastructure?
The voice is not clear, sir. The voice is not clear.
Sir, may I request you to rejoin the queue, please?
Yes, okay, thanks.
Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Ayush Vimal from Clearview Capital Management. Please go ahead.
Thanks for giving me the opportunity, sir. Just a very fundamental question on the pricing contract that you have with your customers. So I understand that the pricing contract is on the basis of a spread on the purchase price of bitumen that you have, right, with the customer?
Thank you for the question. There is no agreement as such with any of the customers in terms of pricing. Whatever prices are being declared by PSU on a fortnight basis, that is the basis of giving any pricing to the customer, and a customer is getting discount on the basis of PSU pricing declared every fortnight. Yes, with the refineries PSU contract, there is a price formula, but not with the customers.
Got it. And over the last 3 years, we've seen that the spread that you've made, basically the price at which you sold bitumen to your customers versus what you've brought, in absolute terms, that spread has been increasing over the last 3 years, and it's been increasing significantly, which has contributed to your profitability. Where do you see that going? If I look at your FY22 results, then you've got an EBIT of about on the core bitumen business. The EBIT is close to about 53 crores on a turnover of 385,000 tons, which comes to about 1,374 per ton. Where do we see that going forward?
I would just address this question by we are trying to increase. If you have seen the earlier year before that, it was at about 1,100 in absolute terms. That you are the amount that you mentioned as 1,300. It was at about 1,100.
That's right. That's
whatever increase in volumes we make, it helps us in increasing additional profit, because all the other costs, fixed costs are remaining the same. There is hardly any throughput charges that we have to pay by increasing the volumes. So all additional volumes that we'll be increasing, it will definitely help us in getting good set of absolute numbers.
Got it. So from what I understand, so the spread that's there, which is the selling price minus the purchase price, that hasn't been materially impacted over the last 2-3 years. The increase in the absolute margin is purely because of the fixed cost absorption benefit we are getting.
Yeah, the optimum or overutilization of the facilities that we have. So when you're overutilizing the facilities, there is not a major cost involved. It is only throughput charges, say about 10-15% of the entire fixed cost.
Okay. And the historic
volumes game really helps us in getting good set of numbers.
Got it. So historically, have PSUs tried to have you seen occasions where the prices of bitumen that's been declared by PSUs has undergone a substantial fall, much beyond the fall that you experience in normal crude prices? I'm just trying to get an understanding of whether the spreads that we are having, whether they can reduce because of some pressure on demand and supply.
Yeah, thank you. That's a very good question that you want to answer for. See, we are in this industry for so long, so we know when the prices will go down or when the prices are going to go up. Whenever the prices are going up, we try to keep the inventories at the highest levels with the sales going on. So when the prices are increasing by the PSUs, we have a maximum inventory for which we can take the benefit for. And the same way when the prices are going down, so in international market the prices goes down before it goes in or it is done by the PSUs. So whatever the product comes in when the prices are going down, it is already at a lower cost.
Got it. So very helpful. If I can just squeeze one more question, sir. Over the last year, I think most of your capex is around the ship operating and charting business.
Yeah.
I wanted to understand how much volume we can achieve on an annual basis with the current capacity that we had. So we were at 385,000 in FY22.
Yeah.
And in the first half, we were at 164,000. So what is the maximum that we can go at if we were to optimally utilize our existing capacity?
There is no maximum method. We can turn around our tank storage capacity even in 1 day or 3 days. So the demand is a major booster for turning out the capacity. So if the demand, suppose tomorrow there is a good set of demand, all the work that starts all the contractors which are waiting for the monsoon to get over, if they all start, I think we will be able to do even 7 lakh tons in the balance 5 months that we have. And for that, you need to have a logistics cycle in place to import that much of quantities. So that is why we are increasingly focusing on the capex of marine vessels, so that we are not dependent on any third parties for providing the logistics part for importing bitumen.
Got it. Thank you so much, sir.
Thank you so much.
Thank you. The next question is from the line of Shubham Jain, individual investor. Please go ahead.
Hello, sir. First of all, congratulations for good set of number. Sir, I just have a very simple question. Can you please share CapEx guidance for any FY23 or 24 if we have?
Thank you so much. CapEx guidance, as I have been telling in the few last phone calls also, the major CapEx will go into if addition of any vessels. That is also on an opportunity base. If we get any opportunities wherein we see that the vessel is at an attractive price, that part would come into CapEx. But yes, small CapEx of addition of a new machinery or a small part, it goes on in the Indian entities, Indian business now and then. The major part of CapEx will come from the vessel side only.
Sir, can you just show some particular amount or can figure so that I can, it will help for me for the predicting some guidance or anything?
Value is about 7 million to be precise. The size of vessel that we are looking at the market right now, the market prices. So a vessel typically will cost us about 7 million plus minus. So 7 into 8. So it is about 50-55 crores today.
For FY23 and 24, right?
Yeah, it is for FY23. Yes, FY24 guidance I am not giving. But yes.
Only FY23 in H2. Okay, sir.
Because it's very difficult to predict the prices of these vessels going forward.
Okay, sir. Sir, that's it from my side. Mostly questions are answered by you. So thank you so much, sir.
Thank you so much.
Thank you. The next question is from the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Thank you. So I just wanted to understand a concern about your business. You mentioned that your manufactured product has a margin of about 10%, while the trading or the imported product, your margin is about 67%. Is that understanding correct?
No, the 6 to 7% is the average of the entire revenues.
Okay, so what would be so I presume the imported business would be even lower at, let's say, 4-ish.
About 4-5%. Or maybe.
Okay. So what is the constraint? Why are you not then putting in more capital into manufacturing instead of buying ships?
Yeah, thank you. A value-added product is a small component which goes into making of these roads. So if you take an example of emulsion, so for supplying emulsion or for making a road, the emulsion is very small part of the entire road that they will be making. The major portion of making the road will go into the bitumen side. So the bitumen that they will be using would be at least say 1,000 times more than the emulsion that will require for that project.
Mm-hmm. So the value.
Also,
sorry, sir.
Product that we are importing, as I said, it's an finished product that can be produced in the manufacturing plant. But if you have to produce that product in the manufacturing plant, you have to get that much of quantity into the plant first, and then produce that product, and then transport to various parts of India wherein the product is required. Whereas it is readily available in the international market and can be easily placed logistically as per the demand in the various states of India.
Right.
And we will be able to get higher margins than importing this product and placing it at a particular location for supply of a particular project.
Right. So therefore, what I understand is that at least on the value-added products, there is enough capacity available with you, even if the demand were to rise substantially from here.
Because it's not a continuous. We can work even in 3-4 shifts if there is a additional demand, or in any month there is a good demand of particular product. We always all the factories are working even overtime to finish that orders.
Okay, so just a last question on this. So how many times? What would be the current volume you are producing versus what is the maximum possible in 3 shifts?
I said we are already at 30 to 40% manufacturing from the
40%.
Of the total volume that we are making.
Yeah. Thank you, sir. Thank you very much.
Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Keshav from Raksan Investors. Please go ahead.
Sir, can you talk about the post-monsoon demand currently, if we are fully on track with it or it's slowly ramping up?
Can you repeat once again, please?
Yeah. Can you talk about how the post-monsoon demand is shaping, if we are fully on track with the demand or it's still ramping up?
We are fully on demand, but yes, if you say state-wise, their demand has not started in some states, maybe Gujarat because of the elections next month. So they are yet to start to the fullest level. Maybe after elections, they will work overtime to complete the job that they have not done in, say, this 20-25 days before the elections. So in terms of demand, there will be, it's already there in some parts, and maybe in the south because of a little bit of monsoons coming up here and there, it stops and then it starts. But demand-wise, it has started over the entire various states in India. Okay. It is in line as the usual cycle of the season.
Got it, sir. And sir, our inventory holding period is roughly in line with the 50-day tenure which PSUs have on pricing.
15, not 50, 15.
15, yes, 15, yes. So our exposure to commodity pressures is limited to only very sharp short-term moves, but otherwise we'll be able to maintain our ROCs on, say, on a yearly basis. Is that the correct understanding?
Particularly if you say about this commodity, it is not a commodity that is very volatile. Crude is volatile, but this commodity is not very volatile. Yes, a very, spike of rates in maybe crude or on the bottom side, then maybe in 15-20 days it will affect, but not as such prices driven for this commodity.
And sir, that is only possible for a player like us with a end-to-end logistics in-house.
We can manage our inventories depending upon the indication of price, maybe a price increase or decrease. If you say the 16th, the prices were up, so our inventory was on the higher side. And if the prices are going to go down, then the inventory is on the lower side. And the product that is coming up is already at a lower price.
Got it, sir. Thank you. Thanks a lot, sir.
Thank you so much. And if you see the balance sheet, in the company's history, there has never been an inventory loss at all.
Okay, got it, sir.
Thanks
a lot, sir. Yeah.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Anupam Agarwal from Lucky Investment Managers. Please go ahead.
Yeah, good morning, sir. Thank you for the opportunity. So my question is on the capex again. So you mentioned 50-55 crores per vessel. So can you give some color as to what tonnage of the vessel that we are looking at, whether this capex is going to be followed every year, and how many vessels are we looking to add in the near future?
Thank you so much. The vessel size is about, say, between 6 KT to 10 KT or maybe 6 KT to 12 KT. And if we are taking a bitumen, a vessel that is already a bitumen vessel, then yes, a small vessel of 6 KT would be required, say 6-7 million. And if we are taking a vessel that is not a bitumen vessel, then for conversion we require additional capex. When in absolute terms of today's market of the marine vessels is very in demand. So the prices of vessels are on a higher side. And coming to the other question of how many vessels we require, the volume that we target to grow at, or the volume that we are currently at, we easily require about 13 to 15 vessels in our own fleet to bring this kind of a volume.
Got it. So
that answers your question of how many vessels may be required. Because we are, even after having these marine vessels that in our own fleet, we are still hiring third-party vessels apart from these vessels to bring the product into India.
Yes.
And all the capex of these marine vessels are also opportunity-driven, wherein we are getting a good deal, suppose a vessel at a very attractive price or a distressed sale. So that is a management call wherein to take the vessel at that price. That is an opportunity price.
Right. Sir, because from our earlier interaction, you mentioned that incrementally all the vessels that we're looking at is going to be around 10 to 12,000 tons.
Yeah.
So is that right?
Yes, yes. But see, as I said, it is both. It depends upon whatever vessels we are bringing in Indian coast. All the vessels, all the ports are not having those kind of a draft available. So we have to have a mixed match of 5 to 7 KT vessels with 10 to 12 KT vessels.
Got it. Got it. And sir, this 50-55 crore capex every year, will this be funded through mix of debt and internal accruals, or how?
As of now, I think all the vessels are mostly done by internal accruals.
So we are not looking to add any incremental debt, or what kind of debt are we comfortable with in our balance sheet?
I think we are very comfortable currently with minimum debt. So even if we are adding about say 10-15 million in our on the balance sheet, I think the balance sheet will not have any impact.
No problem. That answers my question. Thank you so much, and all the best, sir.
Thank you so much, sir. And again, the vessel that you mentioned is only one vessel capex. So we may go for 2-3 vessels in a year.
Understood. Thank you so much.
It will be 2-3x of one vessel.
Thank you.
Thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Vinayak Mohta from Stallion Asset. Please go ahead. So the line for the participant dropped. Ladies and gentlemen, you may press star and 1 to ask a question. Next question is from the line of Rahul from Sunidhi Securities and Finance. Please go ahead.
Sir, am I audible?
Yes, sir, you are.
Yeah. So congratulations for a good set of numbers. My major question is like your charting business, the revenue share is growing significantly. So I wanted a guidance on the next 2 to 3 years. What will be that growth, and are the margins of 22, 23, or 27% sustainable going forward in the charting business?
Yeah, thank you so much. Yes, very much. I think the current set of percentage that we are having, very much we will be in line or in fact higher. I don't see any reasons for going below this percentage at all. Yes, with the addition of the new fleets that we are already discussing, the revenues will also grow, and the same way profit will be growing in that segment.
So any set of metrics like number of trips or the capacity utilization, or
it is already at almost 100% capacity.
No, I mean
already
it's
like 100% capacity, adding additional volumes, addition of the vessels will also be deployed in the same manner when it will be optimally utilized 100%.
Yeah, but you give the numbers of the bitumen trading, and also any set of numbers which we can get for the charting thing, like tons or number of trips in a year.
See, if a vessel is going to a different location, if it is going to India, west coast of India, it only requires about 15 to 17 days. But if it's going to east part of India, it requires about 30 days. So in terms of revenue, it will get both benefit of going into the east side. But again, if you say ton wise, it will do only one trip. So it all depends upon which location it goes into, and the prices are accordingly priced for that in terms of freight.
So we can assume a 50% growth year on year, if I'm not wrong, in the charting revenue.
Growth in terms of revenue, it depends upon how many vessels we add.
Okay. So if you're adding, you said the 2 vessels.
First half of last year and first half of this year, I think, one second, I will give you figures.
Yeah, you have done 83 crore around of revenue in the half year.
Last year we were about, say, 53 crores, against this year about 84 crores. So 50 to 60% increase. With the addition of vessels, yes, we will be in line with what over the last few years that we are getting.
Okay, so you are adding 2 vessels for this year, so we can assume that percentage which you said, around 50%, right?
Whatever we have only added 1 vessel in the first half as of now, as declared.
Okay. Yeah. Thank you. That answers my question.
Thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and one to ask a question. The next question is from the line of Vinayak Mohta from Stallion Asset. Please go ahead.
Yeah. Yes, sir. Sir, just a follow-up question. I'm relatively a little new to the company. Could you just help me, explain all the business segments, the segmental breakup that you gave on the petrochemical shipping and operations? So I'm a little confused between where at some places you are only, getting the finished product and selling it off, and some places you're getting the finished product and, manufacturing or refining it and then selling it. So could you just help me bifurcate between the different segments for better understanding, please?
We have 4 segments as largely. We have this ancillary infra product, bitumen and allied products, which we manufacture at our plants. Then we have the shipping business in UAE. We have the logistics part, wherein we have the bitumen and LPG tankers in India, and the petrol pumps on the 4th segment. So these are the 4 segments that are contributing majorly to the company's revenue.
And in this, the bitumen ancillary infra would be the largest part, right?
Yeah, and ancillary infra is the largest, competing the shipping business.
Understood. Okay, great. Thank you. Thank you so much.
Thank you so much.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. As there are no further questions, I now hand the conference over to Mr. Namadin Rane for closing comments.
Thank you, Nirav. On behalf of M Securities Limited, I thank Agarwal Industrial Corporation Limited team for giving the time we spent on this call and responding all the queries in a detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over the call to Nirav for the final for the closing remarks.
Thank you very much. Ladies and gentlemen, on behalf of M Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you so much.
Thank you.